The United States just did something nobody thought was possible. Today, the Trump administration lifted sanctions on Russian oil. The same sanctions we imposed to punish Putin for invading Ukraine. Why? Because the war with Iran has gotten so bad that America is now desperate for every barrel of oil it can get. This changes everything. Let me take you back a few weeks. On February 28th, the U.S. and Israel launched strikes on Iran, killing Supreme Leader Ali Khamenei. Iran retaliated hard, missiles at U.S. bases, drones at Israel, and then they played their biggest card, shutting down the Strait of Hormuz. Now, if you don't know, roughly 20% of the world's oil passes through that narrow waterway every single day. When Iran's Revolutionary Guard said not a single liter of oil would pass through, they meant it. Tanker traffic dropped 70% overnight, over 150 ships just sitting there, anchored, waiting. The result, oil surged about 35% in a single week, briefly hitting nearly $120 a barrel, the biggest weekly gain in futures trading history. Let that sink in. Gas prices in California blew past $5 a gallon. Because of course they did, California always gets to be first at something. The International Energy Agency, the IEA, called this the largest supply disruption in the history of the global oil market, and the S&P 500 just posted its first 3-week losing streak in about a year. Fun times. So here is what happened today. Treasury Secretary Scott Bessent announced what he called a narrowly tailored short-term measure, which, in Washington speak, means we're panicking, but we don't want you to know that. The U.S. is temporarily allowing countries to purchase Russian crude oil that's currently stranded at sea. These are tankers that were loaded before March 12th and are just floating out there because of sanctions. The authorization runs through April 11th. And Bessent hinted that more sanctions relief could follow if the oil crisis continues. Think about what that means. Years of sanctions on Russian oil, sanctions that were the centerpiece of the West's economic war against Putin, and now we're walking them back because we need the supply, but it gets even more interesting. Russia immediately welcomed the move. Shocked? I know. They pushed for even broader sanctions relief. Meanwhile, the European Union is furious. EU officials say this gives Moscow a financial lifeline right when the world should be keeping pressure on Russia over Ukraine. France separately announced a naval escort mission for tankers trying to get through the Strait of Hormuz because nothing says diplomacy like warships. The oil market reacted immediately. WTI crude settled at about $98.71 per barrel, still up over 3% on the day despite the sanctions relief, because traders know this is a Band-Aid on a bullet wound. So what does this mean for your portfolio? Let me break it down. Energy stocks remain the clear winners here. ExxonMobil and Chevron have been among the only green names on brutal down days this week. If you're an XLE, the energy ETF, you're one of the few people smiling right now. Congratulations, you're the main character. But the bigger story is what this means for the broader market. The S&P 500 closed at 6,232, down about 0.5%. The Nasdaq got hit harder, down almost a full percent. We're now sitting 5% below recent highs. The word on every analyst's lips right now is stagflation, slowing growth combined with rising inflation. Q4 GDP was just revised down to 4.7% growth. Core inflation is running at 3.1%. Gas prices are up 21% in 1 month. This is the exact toxic mix that crushed markets in the 1970s. And if you think that comparison is dramatic, look at the chart. And here's the kicker. The Federal Reserve meets next week. They're almost certainly going to hold rates steady at 3.5 to 3.75%. But the market is now pricing in almost no rate cuts for 2026. A month ago, there was about an 85% chance of multiple cuts this year. Now it's down around 35%. The Fed is boxed in. Cut rates and you fuel inflation. Keep them high and you choke an already slowing economy. Pick your poison. Other casualties today, cruise lines are getting destroyed. Carnival and Norwegian are down over 20% this month. Adobe dropped 8% after its CEO announced he's stepping down after 18 years. And Ulta Beauty fell 10% on weak guidance. Because apparently people stopped buying $40 mascara when gas costs $5 a gallon. Who knew? Here's what you need to watch going forward. Number 1. The Strait of Hormuz. Iran's new Supreme Leader Mojtaba Khamenei has vowed to keep it closed. The U.S. Navy says escort operations will begin soon, but actually securing that waterway against a determined adversary is a massive military undertaking. If it stays closed, oil could push well past $100 and stay there. Number 2. The Fed meeting on Wednesday. Chair Powell's tone will matter more than the rate decision itself. If he signals the Fed is worried about stagflation, expect another leg down. Number 3. The Russia sanctions question. Today's move was limited, just oil already at sea, but Besant hinted at more. If the U.S. broadly eases Russian sanctions, it could help oil prices but would be a seismic geopolitical shift with consequences for the Ukraine conflict. And number 4, NVIDIA's GTC conference starts Monday. In a market this rattled, any positive catalyst from Jensen Huang could trigger a tech relief rally. Conversely, if AI hype disappoints, tech could lead us lower. The bull case, oil stabilizes, the Fed threads the needle, and AI earnings keep delivering. The bear case, we're in the early innings of a stagflationary spiral that hasn't been fully priced in yet. Look, today was one of those days where the world shifted a little bit under our feet. The U.S. lifting Russian sanctions because of an oil war with Iran? That's not something anyone had on their 2026 bingo card. And honestly, at this point I'm scared to look at what's next on the card. If you're an investor, you need to be paying very close attention right now, because the moves we see over the next few weeks could define the rest of the year. If this video helped you understand what's going on, smash that like button and subscribe so you don't miss tomorrow's breakdown. Drop a comment below. Are you buying this dip or staying on the sidelines? I read every single one. See you tomorrow.